The opening itself is at 10,010, so we have all-time high. 10,000 mark has been taken out.
Big day. Congratulations to all concerned. There's so much of wealth that has been generated.
There's a huge confidence on the political leadership. It's a confidence of Indian economy.
Points to a long-term bull market being in India in a very, very healthy manner.
That's the number you're working with. Okay. 46 lakh crore rupees. That's the total wealth in terms of market capitalization.
10,000 is here, and even now 9,995. That's brilliant.
I would say, as far as India's story is concerned, I would repeat my favorite phrase, that picture abhi baki hai to.
Well, it has been a historic day on Dalal Street. 10,000 is finally here. Good evening and welcome to this special broadcast where we bring you 10 of the biggest voices on Dalal Street in 30 minutes. I'm Shireen Bhan. Now, the Nifty has entered the 5-digit orbit, but only briefly. Profit booking towards the end did force the Nifty and the Sensex to end with marginal losses, but that could not take away the sheen of what was a record-breaking day for our equities. In fact, this has been a record-breaking year for Dalal Street. The Nifty has rallied 22%. That is just since the start of the year. And the Sensex has surged 21%. So that's the story so far for 2017. Just 15 months ago, the Nifty was languishing below the 7,000 mark. In fact, it's 6,826. That's the number for the 29th of February 2016. And on the 25th of July 2017, that's the story on your screens. Many were predicting a further sell-off, but that was not to be. And now the Nifty has touched the 5-digit mark. The remarkable 10,000-point rally on the Nifty has taken just under 350 sessions. So that is something to take note of. 347 sessions to be exact. That's how far we've come over the last 350 sessions. The Nifty has risen a whopping 46% in the last 15 months. Banks have been the biggest stars. Let's take a look at the sectoral indices now. Mid-caps have also outperformed the blue chips. So that's the Nifty, 46% higher. The Nifty Bank, that's the clear outperformer, 75% higher. The Nifty Mid-cap, 59% higher. The Nifty Pharma Index is down by about 11%. So that has been the biggest laggard. Two of the biggest voices on Dalal Street, Deepak Parekh and Vallabh Bhansali, who've seen many bull and bear cycles, many boom and bust cycles, spoke to us soon after the Nifty touched that 5-digit mark. Both veterans believe that the markets remain healthy.
Confidence on India. It is a huge confidence on the political leadership. It's a confidence of Indian economy, the growth prospects, and also the future. The stock markets always are ahead. And they look at the growth possibilities. And even today, the World Bank, IMF have come out with a projection for the next 2 years, 7.5%, 7.7% GDP growth rate. Political leadership is strong. They're taking the right decisions, hard reforms, hard decisions are taking, big reforms, which have pain in the early days, but it's good for the system in the longer run. We've got GST, we've got RERA, insolvency, we've so many reforms the government has pronounced. So I think it's a confidence on India by the global investment community.
And so, this is a salute to all the reforms that have taken place.
Oh, absolutely. No two ways about that. Politically, clearly, one of the few countries in the world which has stable leadership and an extremely strong pro-reform tinge to it. But Mr. Parekh, we still can whine a little about growth. We can still whine a little about cement output not increasing or bank credit not increasing. Would you say that by the end of the year, we will have less to grumble about?
I'm sure we will have less to grumble. I see green shoots in the economy. I see entrepreneurs talking about new investment in capital. I see that HDFC Bank growth in retail and SME segment has been strong last quarter. So it's the large growth, it's the large corporates are not borrowing, and that is why the advances seems to be slow. But please don't forget, when you look at advances of bank, you should also look at how much money corporates have borrowed from the international market and the bond market domestically. The domestic bond market is very large now. It has more depth than it had 1 year ago. Most of the companies prefer to go to the bond market, and Masala Bonds has raised about 50,000 crores. ECBs have been high. Domestic bond issues have been high. Equity issues have been large. So, the bank credit automatically gets impacted.
Absolutely, I have zero doubt. And the way market has ascended 10,000 peak clearly points to a long-term bull market being in India in a very, very healthy manner. So I think investors are welcome, but all investment should be done with caution.
Mr. Bhansali, I take your caution on board. There will always be arguments that valuations are very high. What's your own sense that you think liquidity now is good enough to overcome these valuation fears?
I think one of the very important factors in this milestone is liquidity. There's been huge amount of liquidity, and that looks like continuing to come into the market for various reforms and structural changes that have taken place in the economy. So I wouldn't know whether, liquidity tames multiples. I think liquidity will keep pushing the multiples up. But the people are going to shift to, 2-year out, 3-year out views. And whenever we look at 2-3 year out views, there are always impending dangers. The interest rates, we have broken the back of inflation by, very wise and prudent MSP policies. We are enriching the farmer in different ways and not only through higher prices. This is a very, very significant and very pragmatic move which the government has taken. And this results in, lower inflation and therefore structurally lower interest rates. And when you have lower interest rates, you have room for higher P multiples. So in that sense, also the market has, undergone a big change. So I think it's a very good market, but obviously when the markets are at historical highs, you need to be sure that what you are buying. If you buy junk at these prices, you will get into trouble. If you buy quality companies, even if they go down by 20-30% due to whatever reason, those stocks will come back.
Well, two of the biggest voices there on Dalal Street, Deepak Parekh and Vallabh Bhansali, with their thoughts on where we could be headed. Don't buy junk just because the market's at an all-time high. That's the cautionary advice. But there is no doubt that the rally on Dalal Street has been fueled by foreign flows and global cues. But this time around, there has been no dearth of local participation. Let's just take a look at the numbers. Over the last 15 months, foreign institutional investors have pumped in money to the tune of 39,000 crore rupees. That's the story as far as the cash market is concerned. But now, let's take a look at what domestic investors have been doing. And they are not far behind, and that tells you how the story has changed. Domestic investors have invested to the tune of 36,000 crore rupees in the cash markets. But the markets are reflecting the current growth rate of the economy at large. That is the question, because there seems to be some divergence. What could be the risks lurking ahead? Here are some of the biggest investors with their opinion.
10,000 is here. What next? Can this market still give you a decent compounded annual growth rate from here over the next 10-year period?
Yeah. So, in fact, little longer chances of better return is much higher, in the sense that you have a shorter term challenge, but longer term I'm far more assured that things will be much better, because what has happened is economy is still waiting to take off in terms of corporate earnings, and Nifty earnings at about 400 is still on, and index at about 23-24 times is at 10,000. Now, how do we go? I mean, at the current level of P multiples, how do we go from 400 to 800 or 600 EPS in next 3, 4, 5 years? So unless that earnings growth come, I don't see the higher level sustaining. I mean, with the push of money, you can take it to any level, but how do you sustain it higher level without earnings growth? That will be a challenge, and I'm sure at some point of time this will materialize. Whether it is 6 months away or 1 year away, God only knows.
From your point of view, going forward, as a portfolio investor, where do you see leadership for this market? Once again with some of these stronger stocks, or do you think we can now back some of the backbenchers of the last 3 or 4 years?
I mean, right now, I don't see any change in the major trends. I mean, it is continuation of whatever was happening, whatever was good for last 2-3 years. Except one thing I see is that the financialization of savings, in the sense that formalization of savings, and for last almost a year, and more particularly after the demonetization, the surge in the cash flow for equities, domestic flow has been distinctly very, very strong. And what it leads to and where it will go and how big it will become, that only time will tell. But this is clearly a new trend. And so this will open up a completely new industry and possibility of large asset management companies, which is in any case a wonderful business. And I believe the larger AMCs are going public, and that will be a new segment of an opportunity in terms of investing.
The earnings growth is likely to remain elusive. I don't see that happening. Forget the next quarter, which is about the GST implementation quarter, but even the second half fiscal 18, the earnings growth will disappoint. That's our published view. But yeah, the India longer-term story looks far better now compared to 3 years back with all the reforms. So that's giving comfort.
So in terms of earnings, what sort of numbers you are working with? Because the street is expecting between 15-16% earnings. A lot of people believe even single digit is going to be a bit of a challenge. What are you working with in terms of numbers?
Our simple framework is 10 to 12%, and we are not incorporating any GST-led negative surprises in this number, which can bring down this number a tad bit more. But from a trend perspective, 10-12% is what looks the best case.
So Gautam, then in that case, what do you do? Because I believe your Nifty target would also be lower than what we right now are. So what do you do? Earnings growth not catching up, but is this market maybe factoring in something that we don't know right now, and we just respect that and just respect what the market is doing ultimately, because that's the market's verdict right now.
So markets always try to anticipate future trends and build in hope or build in fear based on the sentiment. Right now it's building in a lot of hope for the longer term, specifically around the reforms, GST that will drive up earnings growth at some stage. And we did a framework trying to see whether it makes sense. But the ask, even at current levels, building in all the upside from reforms is just too much. So for investors, the simple suggestion is if you want to buy markets here and want to make good returns ahead of the risk-free rate, it's difficult from current levels.
This is a time to celebrate. I think, put a little bit of pat in all our backs, because over the last 10, 15 years, since the time at least I've been in the markets, we have come in various occasions when there was so much doubt that, from a long-term investor who's coming in the market from a 3 to 5 year perspective, which is what we have been advising, equity still will do well and they will make, decent return. We are at 10,000. There are lots of doubts about valuation, about growth picking up, about corporate earnings, etc., etc. So when you look at maybe a 6-month or 12-month perspective, obviously markets have returned phenomenal. Let's not only go by the indices. The kind of money which is being made in small cap, mid cap, even in select large cap companies, it's been abnormally high over the last 2-3 years.
Since we've not even seen a 5% correction in the last 6 to 8 months, I wouldn't be surprised if at any point of time in the next couple of months we see a 4 to 5% kind of a drop. So somewhere around the 94-9500 mark, I think there would be value to get in from a risk-reward perspective. So I think that's probably the ballpark which people can work with from a fresh entry perspective.
Well, there is clear momentum for our markets, but spare a thought for what's happening as far as earnings are concerned and, of course, valuations. It's time now for us to head into a short break. But coming up next, how should you play the markets at these record levels? The biggest fund managers in the country spell out their strategies. Stay with us. We're back in 2.